are prepared to break the silence. I'll be out in the sunshine, running beside the lion.
Welcome back to WINFX Trading YouTube channel. This is the only channel that has been optimized to make you rich trading the Forex synthetic market. In today's video, I'm going to show you simple volatility 75 indices mathematical strategy that generates 10,000 to 20,000 plus pips per day with RR of 1:10 plus. Okay, you know, I don't usually upload quality content of this nature. Most of the times I only look at what traders are passing through. I look at the problem, I create solution to those problems. And one of the issues here is no matter how traders watch YouTube videos or other content from other sources like blogs and website, you really need to be more proactive and practical. And what it means here is you have to be serious in terms of going extra mile. You know, invest in your self-education. You have to enroll for courses from experts, you know, of which WINFX Trading is here, and you have to join our VIP signal channel. 1% of the money you have been wasting, you know, trading, proving that you're a big woman or a big boy, a big man, you know, you don't need to depend on somebody. You need to be on your own. Those money, 1% could have saved you. Okay, we are Forex course. We have made for you everything simple. Like this is safe, made for you services, and let me call it made for you services. Okay, so that's by the way. Let's dive into the main content. Okay, the things we should be considering for this to work, we have to look at the time frame. H1/H4 must be the time frame. Then we need to consider loop/pause. Okay, loop/pause state in the market. Okay, then we consider the trend. We consider the end scream effect. Major swing action, major interest, or area of what value. Area of value. You need to consider this area of value. Okay, area of value. We have to take note of this. Okay, it's already written, area of value. Okay, so I'm going to take you to chart so that we start the rares analysis. Okay, this is a volatility 75 index. Okay, what you need to do is to follow what I'm teaching here, and if you follow it, you will come to realize it will really work. Okay, but if you find it difficult to follow it because maybe by the time you come it has already happened, because these are spontaneous events, okay, then you have to join expert signal channels or enroll for powerful courses so that you learn it more. Like you learn other things that had made you to be missing those opportunities. Okay, so you will not miss them again. Okay, so look at this asset volatility 75 index in the H1. I want to use H1. What is the trend? That's the first question. Make sure the zone level is the least zone level. Yes, it's necessary so that we can see the truth on reality of the market. Okay, so what is the trend? It is downwards. Why do we say downwards? Okay, it is downwards because the price keep falling. Simple. It's not going up, it's falling. When I say trend, I mean the trend of the current part. Please, I assume that every other part is zero and dead. So I don't care about the parts or any other part. I consider this current part mostly from one end of the screen towards the other end of the screen, because we talk about the end screen effect. Okay, it's necessary. Okay, the end screen effect is necessary. Okay, I'm going to explain this video maybe on different historical price actions on volatility 75 index so that it will improve your trust about this strategy. Okay, so whenever price is reacting to the end of the screen, this strategy seems to be losing power. You have to understand me. Whenever price is reacting to the end of the screen, like to the end of the screen like this, bottom or the top, okay, whether you are on H1 or H4, this strategy tends to be what? Losing power, because our signal should be in the direction of the trend. Okay, so and as a typical example now is this is, remember the document, we are talking about loop and pause state. We have discovered the trend is downtrend. Yes, it's making lower lows, it's going down, 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 down. The price keep on taking lower values. Now we have seen the end screen effect. Okay, right now it's reacting to the end of the screen, but it is assumed that it is not reacting to the end of the screen. The reason why you should assume that, so that you will flow with me. Okay, now let's consider the loop or pause state. Now the pause state is a state in a financial industry, like in during a price movement, when the market is literally having zero acceleration. It is financially stationary. I used to say this. There are states that price movement is stationary, like there is no movement, it's financially stationary. Yes, a market is financially stationary when it is moving in a horizontal plane. Okay, how do we can define a horizontal plane? That is the market move between two horizontal boundary, like it go up and drop from one boundary to the other boundary. It drop from one boundary to the other boundary, meaning that such market is having zero acceleration. So the market is ranging. So you have to discover such scenario. You have to discover such scenario. The way you discover such scenario, look for where the market move in the direction of the trend. So this is a downtrend. So it's this part inside this stationary state here. This part is downwards. Let's open it so that you see it. Okay, this, you have to draw the range so that it includes as much point as possible. Okay, so this part is downward, this part is downward, this part is downward. Now the theories, like the major key fact here is that no matter how the price struggle, it cannot advance beyond that stationary state or beyond that that boundary. Like if it will break the boundary, it will break it in the direction of the trend, but it cannot break it in opposite direction of the trend. It can't go against the trend. So the market will play around this area. It will just play around this area. To just play around here, play around here. If a breakout will happen, it will only happen in the direction of the main trend. That is the idea. Okay, so how do we take a trade? Whenever price come back to the boundary that is in the direction of the trend. So which boundary should be in the direction of the trend? In a downtrend. So the upper boundary is in the direction of the downtrend. That is the idea. That is the facts. If it is uptrend, then the lower boundary is in the direction of the uptrend. Okay, these are forces. Each of these slabs carry certain level of force. Okay, about these are economical forces, that are behavioral forces, about human behavior. So here, once price come here, you are going to be selling. And how do you put your stop loss? Where do you put your stop loss? Because our risk reward ratio is 1:10. So, and we are targeting a minimum of 10,000 pip. When you check in the document, you can scroll back, you see it. We are targeting a minimum of 10,000 pip. So try to measure that 10,000 pip. Look at the highest point. Make sure that you draw, when you are drawing this boundary, you're actually looking at least you need 2 points first. Like let that be 2 reaction that create a range. 2 points is enough to create a range. So we have this one, and then we have this one. So you have to wait for the third one to come up. You see, if a market have to range, it have to range. So it shouldn't just range with 2 points. Okay, that's why you need to join VIP if you are tired of doing all this analysis. These are in our blood. Like, we are Forex course. We are used to it. So you could be on a flight, we send you a signal. So you have to understand it's not that we are worrying people to join. No, I think this is just for those that have been losing, not for those that are making it. Okay, simple. So you can see, to get these channels, I think when you get those 2 points that actually clearly shows a range or stationary behavior in the market, you really need to look at the maximum wick. Use the height of that wick, like this one. Use it to model the width of the slab or the rectangle, which we just did. Like this. Okay, we just did like this. Now, what is the next thing? You are waiting for price to come to the highest point of this range. Highest point. Yes, you don't want to be liquidated due to liquidity grab, or when it comes there, then you are going to measure around 1,000 pip. Now, to measure 1,000 pip is you will notice practically that there is stop loss hunt. If you are measuring 1,000 pip, you will be taken out. So what you do is wait for a week to create above this channel that you have thought. Definitely it will happen. I'm telling you that it will happen. When the week creates, wait for price to come to the height of the end of that week, like here, the end of this week, it creates, right? Then you measure 1,000 pip. Just measure 1,000 pip. Measure 1,000 pip. Okay? Measure 1,000 pip. Now, when you measure 1,000 pip, at times it might be a little bit above 1,000 pip, maybe 1,300 pip or 1,500 pip, but it should not be less than 1,000 pip, and it should not be more than 1,500 pip. So you measure it. You give the market, the trade room to breathe. You measure it. So if you have a $10 account, and when you measure this type of thing, you have a $10 account. Remember, if you have a $10 account, and you mathematically have a risk reward ratio of 1:10, like you have a setup that give you risk reward ratio of 10. What do I mean by risk reward ratio of 10? Let's assume that this is basically 10 pip. I know it's not 10 pip, but let's assume it's 10 pip, and then you measure your take profit should be towards the other boundary or below it, because definitely the price will break it in future. Okay, it doesn't mean that it will be 10,000 pip or 20,000 pip, just the range. It could go beyond it. It could be 30,000 pip. It could be just position where you think you are okay to catch up the trend. Okay, so we can just place it here. This is over 10,000 pip. This is around 12,000 pip. Okay, and then you are risking, mathematically you are risking, I know in reality it's more than 10,000. It's more than 10. It's more than 1,000 pip because of stop loss hunt and all this liquidity grab. But when we make it mathematical here, we can assume that this is mathematically 1:10. So you see, is over 1:10. This is 12,000 pip. So is 1:12. Okay. So it left for you to, when you join the VIP channels, we provide you with the lot size based on your equity. There are ranges, let's say from $100 and above. This is the lot size you are using. From $500 and above, this is the lot size you are using. From $1,000 and above, this is the lot size you are using. From $10,000 and above, this is the lot size you are using. From $100,000 and above, this is the lot size you are using. For $1 million and above, this is the lot size you are using. And the number of positions will be provided. Okay, each position must satisfy the minimum risk reward ratio. So if the first TP is hit, you are getting 1:10 risk reward ratio. Simple. So it is distributed and not cumulative. It's not that risk reward ratio when all the TP is hit and then it will satisfy the risk reward ratio. No, individually it is satisfied. Okay, so what are you waiting for? Two things to do it yourself. If you can't do it yourself, you can go for our courses or join VIP signals channel. Okay, so in continuation, what I'm trying to say is mathematically it is 10 people that it is 1,000 people that you are risking, but practically it could go from 1,000, between 1,000 and 1,500, so that we can bypass liquidity grab or stop loss hunt, or just give the market a room to breathe. Okay, so if you have a $10 account, as I was saying, if you have a $10 account and you have known that you are getting 1:12 risk reward ratio, and you want to risk your mathematically a couple of 1,000 pip, so all you need to do is let me take you to my calculator and show you what you need to do. So all you need to do is take that $10,000 $10. I'm sorry, let's assume you have $10. I consider people that are still broke, that are still upcoming, and they really want to make their first $100, their first $1,000, and all of that. Let's assume you have $10 account, and then you are going to divide it by 1,000 pip. Okay, so in other words, for you to meet the criteria of hitting 1:12 risk reward ratio, you are going to use a minimum lot size of 0.001. If you use a minimal lot size of 0.001, once your TP is hit, as we have done, you are making 10 times 12, $120. You have taken your $10 to $120 in a few moments of time, maybe in less than a day. Okay, now if it is a $100 account and you are subject to this 1:12 risk reward ratio, you are dividing $100 by 10,000 pip you are risking. $100 divided by 10,000 pip, that is basically so you are going to be using this is $100, and then you are going to divide it by the stop loss pip, which is 1,000 pip. So you are going to be using 0.1 on that account. Okay, we are using 0.1, but it's not that you want to risk all your money. Like, in the first case, we risk all the $10. Let's assume you don't want to risk. Okay, let's assume you want to risk all, because it is assumed that this strategy is going to hold. You want to risk all your equity, but then you want to at least give it a more chance to breathe. Let's say increase it to 1,500 pip, so that it will breathe. Okay, and then you extend it beyond the range, and like you assume that the market will break out and continue the trend. So you increase the risk reward ratio to basically 1:12, because in the first case we assume that we are risking all, but this time we are not risking all. So no matter how it goes, like you are going to extend, you are going to be moving your take profit as the price move in your favor. You are going to move your take profit in such a way that you will ride the trend. Okay, that's one of the key facts here. So because some people would say, okay, I don't want to risk all my equity, so I just want to risk $50. Let's say 50% of the $100, and I want to have a practical stop loss pip of 1,500. So you are risking 0.3, and based on how you move your take profit, definitely you will maintain that 1:12. Then if you maintain 1:12, that means when you risk $50, you are going to get $600. Imagine. But if you have mind and risk all your $100, you are getting $1,200. Imagine. You know, you have made your first $1,000 from $100. More than your profit is just subtract the $100 you started. That you made a profit of $1,100. Imagine. So this strategy is very powerful. If you have not subscribed to WinFX YouTube channel, do your best to subscribe. Okay, don't waste your time. Don't lie to yourself or deceive yourself. This is the only place I assure you to become successful in trading, like as a beginner. Even as an expert, if you want to invest with us, like you have an account ranging from $10,000 and above, or even $1,000, we can manage it for you. We manage Forex, we manage synthetic, depending on where you belong. We manage all, okay? We manage cryptocurrency, depending what you trade, okay? You need to change your life. But even if you don't have such big amount of money for account management, why not you go for VIP signal channel? You go for our courses, subscribe for our VIP signal channel, you go for our courses. Why not do that? Why should you be blowing account from time to time? Thank you. Remain subscribed to WinFX Trade. Make sure you like this video, turn on the bell notification so that you get notified each time I upload a new content. And share this video to your network so that YouTube pushes to a high level of audience. Thank and bye for now.
If you're prepared to break the silence.